Reaction in the Russell to the jobs report. I'm Angela Miles with the Russell Report. I hope you are doing well. That jobs number today, a rough one. Non-farm payrolls reveal 701,000 jobs were lost during the month of March, and the unemployment rate surging to 4.4%. The Russell initially fell about 1.5% to around 1,070, then tried to rally off that number, slid back down. It's been a back and forth volatile trading day. In options trading, not as many puts out of the gate as you might think. The ratio was actually one call trading for every 1.3 puts earlier today. The theme in trading seems to be, in the shorter term, traders want put protection, but then in the longer term, traders are taking positions for the possibility of upside momentum in the small cap index. Let's start with the near term. In April, traditional puts are active at the 900 strike, and in June there are also some 960 puts active. Most of the call paper is active in May, September, and December. The May 1,100 calls are getting some action. In September, the out-of-the-money calls are in play at the 1,200 strike. Then way out in December, the 1,090 calls are busy. Some traders could be buying those December calls to take a position now to get exposure to an upside move later in the year, and even using those calls as a surrogate to stock as a way to manage risk. The straddle price in the Russell is projecting a move next week of around 6.5%. Last week that straddle was predicting 10%, so perhaps there could be some stability or shorter range swings in trading in the Russell, but 6.5% is still a fairly sizable move. Earlier we did note that the RVX was down about 3% to around 56, even as the Russell was struggling. The Russell has been hit hard by coronavirus fears and job loss. The index fell nearly 23% during March, while the S&P dropped about 12%. The Russell led on the way down. Let's see if it will lead on the way back up. I'm Angela Miles. Stay strong, stay safe at home. I'll see you next week.